Okay, Chapter 5 is managing checking and savings accounts. The so learning objectives. Identify the goals of monetary asset management. Sources of those financial services. Those financial services can come from your bank, savings institution, credit union. They can also come from a brokerage firm. So any number of places to get those types of services. Understand and employ the various types of accounts available to meet your goals. So the the you have basic checking, and then you have interest-bearing checking. You also have a savings account which you can't write checks on. You also have various types of brokerage accounts, and then certificates of deposit as well. So we'll talk about all of those as we work through the chapter. Establish ownership of assets wisely. So what this is talking about is where your money goes in the event of your death. So it can go to your spouse, it can go to your children, so forth. Those considerations could be different if you have, for example, a blended family. So describe the legal protections when conducting monetary asset management, like electronically. So use a free interest earning checking account for your day-to-day spending needs. Open a money market account once you build up a savings on a regular basis. You have to be careful with various accounts. Some of them have minimum balances and so forth. You need to make sure that you can fit that into your personal situation, because the fees for not following the rules are typically substantial. So use pay yourself approach as you begin to build other savings and investment. What this is talking about is taking money out of your pay, directly out of your pay, and putting it into savings and investments accounts. Thoughtfully establish ownership of all financial accounts. Think about who you want to have those accounts in the event of your demise. So, finally, practice talking about money matters with a loved one. Talking about money matters is difficult. People have different viewpoints, different emotions, so forth. So, try to talk about it. So, monetary assets. Monetary assets include cash, low risk, near cash items that can be quickly converted to cash. So, the monetary asset management encompasses how you handle those monetary assets and maximize earnings and minimize the fees that you pay to financial institutions. One of the kind of sad things is that low-income individuals tend to pay significantly more in fees to financial institutions than do wealthy individuals. Financial services industry comprises all kinds of firms that provide these monetary asset management. Again, this could be your bank. This could be your brokerage firm. This could be your savings institution, savings and loan, savings bank, whatever it might be called. Your credit union as well. And I'm sure I'm overlooking those. As we as time passes, things like insurance companies and other financial institutions begin to look more and more alike. So, depository institutions. Depository institutions provide checking, savings, accounts to individuals and businesses as well as loans. Commercial banks, savings banks, or savings and loans, they're insured by the FDIC, or the Deposit Insurance Fund, which was created by the FDIC. They are regulated by the Office of the Comptroller of Currency. Others include mutual savings banks, credit unions, community banks, online banks, so forth. I completely overlooked online banks. Online banks have grown at leaps and bounds in the past 20 years. Deposit insurance. So deposit insurance on any one depository institution. The one thing it's advisable to do is to make sure that, for one, that your institution is insured. So the maximum insurance on all single ownership individual accounts combined is $250,000. But you can combine with multiple owners. You can get $250,000 per owner. So then the retirement counts, and is another $250,000. And then as far as insured beneficiary, is $250,000 per beneficiary. That's with a maximum of 5. So that's so it won't go over $1,250,000. And I've added some in the concept check. And we'll go over deposit insurance in a little more detail in that. So, all right. So we'll start lecture 2 with other providers of financial services.